Hello and welcome back to your South King County Real Estate Update. My name's Sarah Eggleston with Stone Egg Realty at Berkshire Hathaway Home Services, and I am back with your real estate news for the month. I'm going to go ahead and jump right on into these slides here. So it is July 2024, and what's going on this month? I do have a class coming up in a couple weeks. It is our down payment assistance class, so it's sponsored by the Washington State Housing Finance Commission. I teach it with Ashley, the lender. So there's a real estate agent and a lender that teach this class, and it gives you the opportunity to access a lot of the down payment assistance programs that we have in our state, which is really cool. These are 3 to 5% down that they'll help you out with. There's a number of different programs, so some of them there's different setups for them, but this class unlocks those programs to you. Some of them are for low income, but not all of them. Some of them you have to be a first-time home buyer, but some of them you don't. So really, there's a lot of variety in the programs that are offered. Some are state and some are regional, city, but it is a really great class. If you are looking to buy a home and are kind of on the fence about, can I afford it? Can I not afford it? I highly recommend you come check this class out on the 23rd and 24th of this month from 6 to 8:30. I know it's a bit long, 5-hour class, but it's broken into 2 parts. And it's also a webinar, so it is easy to do from the comfort of your own home. Go ahead and grab that dinner and just sit down and come to class with us. I do have my summer buyer and seller guides available as well. Tons of great information in here. So if you would like a copy of these, just reach out and let me know how I can get it to you. And into the news. Seattle house prices fall as temperatures rise, but buyers are weary. King County home prices did drop this month a little bit from last month, but last month we hit a record high. This is a seasonal thing. This happens every year about this time, is we have home prices go up till about June, and then they head on down again towards January. It's just kind of the seasonal cycle of things, but mortgage rates have remained high and are definitely playing into this. It limits the buyers' budgets, and sellers may not want to give up their current low interest rate to go move somewhere that it's going to be more expensive for them. So there's a lot less inventory than we would expect this time of year. And things are moving a little bit more slowly than the frenzied pace that became the norm during the early years of the pandemic. So some people are putting off home shopping until rates come down. That is a common thing that I've heard, although I don't think we're going to see the super low rates that we saw during the pandemic. Home sales dipped from May to June, the number, and were either flat or down a year ago in counties across the region. So here's a look at that on the chart. We're a little bit higher than we were a year ago. Snohomish is a little bit higher than we were a year ago, but we are ticking down from where we were last month. So this seasonal cycle is beginning. For home and condo sales, breaking those apart, the dark blue is last year and the light blue is this year for June. Here in South King County, we did see more home sales than we did a year ago. And for condos, it is a little bit less in Southwest King County and a little bit more in Southeast King County. Condo sales have come down from last year a little bit, and single family homes have come up last year a little bit in the South End here. For home prices and condo prices, in the South End, home prices are up from where they were a year ago, and condo prices in Southwest King County are down slightly, and Southeast King County is up slightly. Spring is typically the time of the local housing market. That is the peak, and generally activity does start to dip a little bit in the summer as people take off on vacations or that sort of thing. But beyond that, there's this quote: a lot of buyers have been beat up with the affordability and rates really not coming down. I talked a lot about the affordability index last month. Things are not looking great on the affordability index, but there's a light at the end of the tunnel. It looks like there are some things that are being put in place that could help make things a little bit more affordable going forward. Homes across Seattle spent about a week on the market in May, and that is being pushed up. So homes are lingering a little bit longer on the market than they were a little bit earlier in the year. Single family homes sold for an average of 3% above their list price this spring, which during the 2022 peak, it was 13% above list price. So there's definitely a huge change there. Supply shortages are starting to ease as new homes are being built, and people are having a lot of the people that are moving and selling their homes right now are kind of the have-to movers. They need to move out of state for work, or move to a house where they can take care of a family member, or that sort of thing. But it's not really a want-to market for most people. It's a have-to market. But while we have more supply now, we're up on supply than from where we were in 2003. If you compare that to years before that, we are way off. There's still way fewer inventory on the market than there was pre-pandemic. And that brings us to our hyperlocal breakdown. So what's happening in the South End here for Kent, Renton, Auburn, and Federal Way. This is new listings. Look at Auburn. There are 40% more new listings than there were a year ago. So this red line, Auburn, is just way up. Kent at 23% more listings on the market. Renton is flat, and Federal Way is actually down slightly from where we were 1 year ago. And then for pending sales, we have come up in Auburn and Renton from last month, and down in Federal Way and Kent from last month for the number of pending sales. Median days on market, you can see, especially in Auburn, with that increase in inventory, we are seeing a bit more of a tick up there on the days on market. So this is the number of days a home spends on the market before it goes pending. But in the other regions, we're still right around that 5-6 day mark. And that is still a very fast, very hot market. But to be up at 12 for Auburn is a pretty big change from a month or two ago. For median sales price, Federal Way did tick up from last month, but we're down in the other 3 areas in home sales price. But we are up in all areas from a year ago. Look, Federal Way, 24.3% higher than it was a year ago. So that's a pretty big change. Last time we met, the rate was at 6.95 for our weekly average and 6.99 for the daily. This month, we are at 6.89 for our weekly average mortgage rate. Mortgage rates are influenced by several factors, especially the bond market. That reacts to the Federal Reserve's interest rate policy and moves with the 10-year yield. The June jobs report showed a cooling labor market, and the 10-year yield decreased this week, and mortgage rates followed suit. Although volatile, we should see the 10-year Treasury rates come down, continue on a downward trend, and as a result, a slow decline in mortgage rates throughout the rest of the year. For the daily rate, we're down to 6.82. So just a few days ago, we were still above 7%, and we have come down quite a bit over the last 3 days. And that's pretty cool news for home buyers out there. If we look at that on our chart here, you can see the blue line is our daily input. So last week we were above 7%, up 7.25-ish. And then now we have come down below 7 marker point. So this is good news and the trend that we want to see. And that is all because U.S. inflation cools again, potentially paving the way for a Fed cut to interest rates soon. So there is bright news on the horizon as far as interest rates are concerned. Inflation cooled for the 3rd month straight. So that is a sign that we are definitely on this trend. And it was better than expected. They were expecting it to be right around 0.2, and it is 0.1, which was actually rounded up to the 0.1. So that's a pretty encouraging number. And measured from 1 year earlier, prices were up 3% in June, cooler than the 3.3 annual rate in May. So remember, the Fed's target is 2%. You just go back and take the monthly change for the past 12 months, and then you have your annual change. The latest inflation readings will likely help convince the Fed's policymakers that inflation is returning to their 2% target. Brief pickup in inflation early this year had caused officials to scale back their expectations for interest rate cuts. Originally, they were projecting that there was going to be 3 Fed cuts this year. Now they're down to projecting that there will be 1. Most banks are forecasting the rate cut will be in September. So If that does happen, there is a chance for multiple rate cuts throughout the year. But right now, the guess is that they'll just do the one. And a lot of professionals are saying they think it'll be in September. Also on Thursday, Mary Daly, a key Fed official, suggested that the central bank should cut rates soon. Daly, president of the Fed's San Francisco branch, said she believed that slowing inflation and cooling job market justify a reduction in interest rates. She did not address the specific timing of any rate cuts. But the fact that we have a key Fed official saying this to the public is really, really encouraging. Fed Chair Jerome Powell noted that the job market has cooled considerably and is not a source of broad inflationary pressures. That marked a notable shift from his past comments, which had suggested a rapid wage growth could perpetuate inflation because some companies would likely raise their prices to offset their higher labor costs. This one came out yesterday, this article. The Consumer Price Index is the most important economic report for the bond market these days. The most important line item in that report is the month-over-month core CPI, which excludes food and energy. That number was forecasted to hit 0.2, but instead came in at 0.1, rounded up from 0.65. So this drop here from last month, really good news. We are headed in the right direction. Hopefully we can have it be a little more stable at this lower rate heading forward. For mortgage rate projections, we have a few different projections here for Q3, Fannie Mae, MBA, and NAR. The average of all three of those predictions is 6.83. They're suggesting we'll end the year at 6.67 and then heading into 6.5 during Q1 of next year. And here's the volatile mortgage rate ride that we've been on during the pandemic. It got super low and then just shot up, skyrocketed as those inflationary numbers came in 2022. Fed raised their central bank rate, and we have remained pretty high since then, but it's projected that we will tick down from here on out. And this is from Lawrence Yoon, chief economist at NAR. The market is at an interesting point with rising inventory and lower demand. Supply and demand movements suggest easing home price appreciation in coming months. Inevitably, more inventory in the job-creating economy will lead to greater home buying, especially when mortgage rates descend. This is also from NAR, but from Jessica Lautz, and deputy chief economist. One thing that seems to be pretty solid is that the home prices are going to continue to go up. And the reason is that we don't have housing inventory. So we have been underbuilding for years and years and years, and it's showing. There's just a lack of inventory. Not only are people not moving, but we had just underbuilt for so many years that we have this pent-up demand, and builders are building, but not fast enough. We need more housing. So looking back, a buyer's market is when homes sit on the market an average of 7 months or more. A neutral market is 6 to 7 months, and a seller's market is less than 6 months. So if a home sits on the market less than 6 months on average, that is a seller's market. And we have been in such an extreme seller's market for so long. This buyer's market back here, this was that crash, the housing crash. They had overbuilt for many, many years. And then after that, they slowed building. And then we got shorter and shorter and shorter on inventory heading into today. And I just thought this was an interesting thing to bring up. This is the median sales price for the entire MLS going back 10 years. And this is just an interesting thing to show because, like I said, in January, prices start out heading upwards until about June. And then they tick down a little bit. And then from January, they head up to June, and then they tick down a little bit. And that repeats over and over. These were the pandemic years here, so those were a little bit more extreme. But that trend is pretty much the cycle that we are in. So home prices, if you're buying in May, June, that is going to be the highest price for a home. From then, we have less inventory come to the market, and prices tick down a little bit more on average. And that's just our annual cycle. For home price forecasts, judging from all of these entities giving their predictions, the average that they think will end 2024 at is 2.8% higher than we were last December 31st. And just a quick reminder about that upcoming down payment assistance class again. Please make sure to register for this and save your spot. I'm so excited to teach this class again. It's a really, really good one. Even if you don't need down payment assistance, it's still a good class and goes really in depth. But especially if you need a little bit of help with that down payment, this is a really great option. I cannot emphasize that enough. So many great programs exist out there, and they're coming out with new ones all the time. And those summer buyer and seller guides are available, so let me know how you would like to receive your copy. If you have any questions, please feel free to reach out, and I would love to have a conversation with you. My phone number is on the screen there. But thank you so much for joining me for your South King County real estate update. I'll be back next month with your local real estate news, and of course, touch on the national stuff too. Thank you so much for joining me, and I'll see you next month. Have a good one.